Hello everyone, welcome to Bald Guy Money, and today at almost exactly 3 p.m. Beijing time, at the very moment a major Chinese national holiday celebrating the founding of the modern republic began, the prices of gold and silver mysteriously started selling off, as reported by my friend Eric Young on his X account. And to be clear, they sold off in a big way, with gold falling from its daily high of $3,872 an ounce by more than $70 to below $3,800 an ounce at one moment, and silver coming down from its high of $47.17 an ounce to below $46 an ounce. And it has people wondering what the heck is going on with gold and silver, why did this happen, and what comes next. So in this video, I want to discuss this topic starting with the triggers of this massive gold and silver sell-off, including how these manipulations work and why they're done. Once that's covered, I will tell you all when we can expect this round of manipulation to end and what it means for our short-term and long-term outlooks on gold and silver prices moving forward, including a very important clarification on what happens when silver reaches $50 an ounce. Now, just before we dive in, I want you all to know that this bonus midweek video has been made possible by investing.com and their amazing market analysis tool, Investing Pro, which I use to track my mining stock portfolio and also compare the stocks I hold versus other high-quality mining sector players in order to identify undervalued stocks and additional investing opportunities like Thor Explorations, which their powerful tool is telling me is a good, small producing mining company that is undervalued right now compared to other stocks that I own. So if you want to supercharge your investing strategy or just verify what it is your favorite YouTubers are saying when they promote mining stocks, many of which are really bad by the way, please sign up for investing.com's Investing Pro package and remember to use my link in the video description and pinned comment below to get 15% off, because if you're investing thousands of dollars in metals and miners right now, you shouldn't be doing it blind, and this tool is really a pair of glasses that helps you see things clearly. So jumping in, back on August 28th, I got on X to inform my followers there that we were starting to see the early signs of big institutional players taking positions in precious metals. And it wasn't only gold I warned about, and I brought that message to YouTube shortly after to say it was silver too, with the Saudi central bank having taken a stake in the SLV silver ETF. Now, since I made those posts, we have seen the price of silver rise by more than $7 per ounce. We've seen gold rise by more than $400 per ounce. And as a consequence of all of that, the mining stocks, which I mentioned in my last Tuesday video a couple weeks ago, have also done very well, with the GDX large miner ETF outperforming both gold and silver, up more than $14 a share at the time of recording this video, or 23% since the end of August. And these moves in metals, driven by big institutional entries, have propelled silver to the 6th position on this list of top 10 investable assets ranked by total market cap value, and it's allowed metals to maintain a dominant position on this list at 55.1% of the value of all of these top 10 assets combined, despite the fact that the stock market is at an all-time high right now. And as I regularly like to point out when I show this image, what this means is that all the gold and silver in the world are more valuable than all of these companies and Bitcoin combined, and I expect this trend to continue. Now, despite evidence that big money has entered the gold and silver game, it doesn't mean that manipulation of precious metals prices has stopped. And we saw a great example of that on Wednesday, September 17th, when silver, as it was confirming another breakout above $42 an ounce, got slammed down below $42 for 2 days before the price finally recovered and continued to move up. And the reason things like this happen is because the big money, the institutional players, are not fully positioned yet. And what they do is they pick specific moments like when a price breakout is confirming, to create the illusion of selling pressure, often through fake selling orders and often with the help of big bullion banks to get price down a bit to make sure they can secure slightly better prices for themselves and big clients they are helping scale into precious metals. And just so you all understand how this works, and I've used this example in videos in the past, imagine you're selling a car and you check the price online and you see that the car is going for about $18,000, so that's where you set your price. Well, if someone wanted to get a better price on your car, what they could do is they could create a bunch of fake ads for the exact same car at a lower price, let's say $15,000 in this example, blocking your more expensive car from getting interest from buyers. Now, once you see the price has gone down because nobody's calling you to buy your car, what do? Well, you adjust your price, right? Based on all of the fake ads, at which point the person who put out the ads buys your car and then they delete all of their fake ads, and in the case of silver, their fake selling orders, which then pushes the price back up again to what the fair market price was to begin with before the manipulation took place. And this really happens. And banks like JP Morgan have even paid fines for doing exactly this. Now, some of you may be asking, how can I be so certain that this is a temporary manipulation to allow big money to get in and not a sign that big money was just late to the game and now they're taking profits at the market top? Well, it's very easy to check if you know where to look and what to look for. And with billionaires like Ray Dalio publicly talking about 15% exposure to gold, all you have to do is check the status of their gold holdings as a percentage of their portfolio. And luckily, the Investing Pro tool from investing.com makes it easy to do that, because if I dig into the ideas section of the Investing Pro tool, I have access to different famous investor portfolios, including billionaire portfolios, hedge fund portfolios, including Ray Dalio's portfolio. And as you can see in this screenshot from the Investing Pro tool, only 1.4% of his portfolio has been moved into gold so far, telling me that Ray Dalio and other major institutional players are only getting started as they follow institutional powerhouses like BlackRock, who I said this past Sunday never loses, into larger gold positions and possibly silver positions like the Saudi central bank has taken, as well as gold and silver mining stocks, which once again, by using Ray Dalio's portfolio from the Investing Pro tool, he is also still underinvested in, with only 0.2% of his portfolio allocated to gold miner Newmont, with another 0.1% of his portfolio allocated to uranium miner Cameco, both of which, by the way, are top performing stocks in his portfolio. So based on this information and the data that I've just presented, what I can say is that we should expect more of these large, unnatural daily price smackdowns in the future as institutions continue to grow their precious metals positions with the help of their banker friends. That said, expect this current manipulation cycle to end no later than Thursday, October 9th, when the Chinese holiday that these big guys took immediate advantage of comes to an end and the Chinese market opens again, if, of course, it doesn't end sooner than that, like, for example, today or tomorrow. Because this is not the end of the gold and silver bull run, not by any stretch of the imagination. Paper money is failing, and I think I demonstrated that well in my last video where I showed you all how the price of a new iPhone has fallen significantly when measured in gold and silver since it was first launched in 2007, despite the fact that the US dollar price for the basic model iPhone has risen by 60% over the same period of time. And as a reminder, where we are today, as I said on Sunday, is just the early stages of what is to come, much like the period between 2003 and 2006, where metals were already doing very well, but did even better in the 5 years following 2006. So as far as I see things, there is still plenty of time for newcomers to secure their positions in gold and silver, and plenty of time for people to make money over the next couple years in the mining stocks, as long as you can handle a little volatility, which is sometimes, like today, manufactured. And jumping into this video's viewer question, which comes from Matthew Jones, who asks, how big of a pullback should we expect in silver price once it reaches $50? I want to say, do not expect a major 2008 style pullback to save you from your fear of taking action today. Silver price is not coming back 60% like it did in 2008 because the Federal Reserve saves banks when they fail now, meaning the role that the bullion banks played in the 2008 metals crash, as I discussed in depth in a recent video, no longer applies. And if you're a metal stacker or looking to start, or you want to make some money in the mining stocks, your focus should be on our upside targets. And going as far back as 2021, I've said that the upside target for silver by 2026 was $60 an ounce. And using multiple factors, including current market sentiment and AI technical analysis, the Warren AI tool, which is a feature in the Investing Pro package and actually gives financial advice where other AIs won't, completely agrees with my assessment, saying that if silver breaks above its historic all-time high of $49.82 per ounce, the next realistic upside target is between $60 and $65 per ounce, driven by both technical extension and recent bullish sentiment amongst institutional analysts. Now, will there be volatility and pullbacks along the way? Yes. And what has happened today is a great example of that, because this trip to the moon that we're on is going to have a few stops along the way. And I recently suggested that we would get the next stop at $50 an ounce with a pullback as large as 20%, possibly bringing us back to the low 40s on silver, which again is a sentiment that the Warren AI from Investing Pro also shares, as it warns of 10 to 20% pullbacks on our way up to its target range. But for those of you wondering what that means and how you should act or behave based on that information, I need to be very clear on something here. I don't say these things about the pullbacks for people to use them as an excuse to just wait for the pullback to happen and not take any action today. Because the part of my message that people so frequently forget or just intentionally ignore is the part where I say the pullback might happen so fast that it won't even be buyable if it even happens at all. And you shouldn't ignore that part of my message, because if I'm telling you that something will be $60 at minimum next year and $80 in this cycle, as I said a couple weeks ago, and you believe that, why wouldn't you buy it at $46 today? And that's why I've always favored schedule precious metals buying, and it's been a consistent part of my message here on YouTube for years. Now, something I want to add to that is that it would be irresponsible of me not to warn people who are doing the right thing right now and buying on a schedule about the possible pullbacks. And I warn people about those potential moves to the downside so they don't panic if they happen. So when I share my bullish message, it has nothing to do with changing my tune, Mr. Nick Mitchell, and I'm not trying to be rude. I'm sure you're a good guy and a regular viewer, and thank you very much for that. But I need to be very clear to everybody who watches these videos on this topic, because I've been bullish on metals for years now and even got bullish on the miners in 2023. But it's my realistic view of the market and warnings on possible downside risk that separate me as an analyst from the gold and silver salesman on YouTube. And this information helps my viewers know what their downside risk is and when they can make bigger purchases. So as we finish, I just want to thank Investing Pro from investing.com for making this video possible. It is a powerful platform that I really honestly use and recommend. And if you could please click on my link below to see the deal, even if you don't buy it yet, clicking the link really helps me a lot and could lead to future bonus videos sponsored by them, as this video has been sponsored by them. And if you want to sign up, remember that you get 15% off by using my link, so that's also obviously a good thing. And apart from thanking the sponsor, I also want to thank everybody who took the time to tune into this video. If you enjoyed the content, please leave a like below, and if you would like to see more videos like this brought to you potentially by a sponsor like Investing Pro to get some extra midweek content in the mix, please let me know in the comments section below. I am making these videos ultimately for you, and I am only taking on sponsors that sell products that I myself would purchase. So with that said, I'm wishing you all a fantastic day ahead. And as I say at the end of all of my videos, please remember to take care of yourselves and take care of each other. See you all in the next video. Goodbye.